All right, loyal listeners. Welcome to another episode of Agents Influence, Conversations with Jason Cass. This right here is the podcast where you tell me your thoughts, you tell me your ideas, and I'll tell the world what you have to say. That's what we do here. Now, with this great podcast, this is, as you guys know, InsurTech Week. I don't know if this is the 31st of January, 1st, 2nd, 3rd. I hope 2022 is absolutely rocking for you. So in the Agency Intelligence Podcast Network, this is InsurTech Week. Just think Shark Week, okay? Think that. And that's what we're trying to duplicate here because we really want to build excitement. And you know what, I was actually thinking about this yesterday when I'm putting my creative juice to this Shark Week, InsurTech Week. I don't want to get mean and say that InsurTech people are sharks, but you can kind of look at the analogy of if independent agents don't get their stuff together, somebody's going to come in and eat up that market share. See what I'm talking about here? And so I kind of thought, man, this is kind of genius already. Did you think of this, Shi? Was it InsurTech Week or was it me? Do you remember?
So shark is the apex predator of the ocean, right? Ocean is 76% of the earth.
Yep.
So we're talking about apex predators, and is Tim an apex predator?
That's the question. That's the question, Shi. Let's find out. Jay,
we'll find out.
Everybody, welcome to the podcast. Tim Metzner. Did I say that right?
Yeah,
Metzner?
Correct.
Okay, fantastic. My loyal listeners are clapping. They know I butchered names. Tim is the co-founder of Coterie. I always want to say that that's a little different than how I would have spelt it because I'm a terrible speller. Barely got out of first grade in spelling. My mom had to convince, I don't know how she got that guy to the male teacher to figure out to pass me. She was single. I don't know. All right, just joking. Tim, so what I want to do is I want to welcome you to the loyal listeners. They're anxious to hear from you since this is InsurTech Week. And are you ready for this podcast?
Let's go.
Are you an iPhone or are you a Droid
I'm
user?
An iPhone user.
Wah, wah, wah. But anyways, that's my sound effects back
the
there.
blue
My crew.
bubble rules the world.
Yeah. See, now these guys that are in Canada that are going to start listening, Jeff, I wonder because they say 80% of the world is droids. So I wonder if we start pulling from Canada, we get a little bit higher iPhone. The things I think about. Next question: do you love to win or do you hate to lose, Tim?
Oh, I hate to lose more than I love to win. I think, if I'm honest with you. Yeah.
Think so?
Yeah, I'm a pure competitor.
Any reason?
There's no doubt about it. Although I've never been called a predator, Jeff. That might be a first.
Apex, he said.
Predator,
Apex.
Right.
Yeah. No one knows what that means except for Jeff. I mean, we don't. We're just like, okay, Apex. That must mean like A, top. We don't know. Anyways, last question. 2 things we believe got you to where you are today: skill or luck. Which one would you say has been a bigger factor in your life, Tim?
I would say fortune. Yeah, so we'll go with luck, not skill. But I believe hard work absolutely creates luck. And for me personally, I would say, God has kind of handed me some opportunities that I didn't earn.
Boom, boom, boom. No doubt about that.
Give some shout out to God.
I'm glad you appreciate that. A lot of people are absolutely against some of that stuff. Not religion, I'm talking luck. They're like, no such thing as luck and all that. And it's like, dude, come on, how have you lived and not thought any of this was luck? And then some people are like, there's no such thing really truly as a skill. You just get lucky where you're at. And I'm like, wow, how do you guys get there? It's like Republican and Democrats come to the middle. So here we go. Give us the 2 to 3 minute background of Tim. Take us back to diapers, high school, college, wherever you want, and bring us forward to how you became this co-founder.
Yeah, happy to. So born and raised in Cincinnati, Ohio, still here today, actually. Great place to raise a family. I went to University of Cincinnati. In high school, I was a basketball player and had dreams of playing college basketball. And probably could have gone and did that at some small schools, but then I got a full ride academic scholarship at University of Cincinnati and decided it would be silly not to take money to go to college. So at the time, University of Cincinnati was one of the best basketball teams in the nation. So I toyed with walking on, but it was not to be. So ended up finding my way into business and always had this idea that I wanted to be an entrepreneur. I always say I think it's a seed planted by God because I didn't grow up around it. Like I didn't have a family member who was an entrepreneur. Going into college, I probably couldn't have even really told you what it was other than I just felt like someday I wanted to be a business owner, right? So as part of my program, I was required to co-op, which just meant every other quarter, one quarter I was in class, the next quarter I would go work for a company. And the first
Gotcha.
co-op I did, even though the other folks in the scholarship program were going to like Kroger and Fifth Third and P&G and all these great companies we have in Cincinnati, I met an entrepreneur who had just sold his company to eBay, and this was late 90s, early 2000s. And he was working on starting his second startup while doing his earn out at eBay. And I just decided, like, I'm going to go work for this guy and learn what the heck it's like to be an entrepreneur. So that was my first taste of kind of the real world professional world. And, I've never looked back. I just fell in love with, this was a mission-based company trying to help people reach their goals and also trying to build a great, profitable, valuable company at the same time. Doing a ton with a really small team, all out of this tiny office in Cincinnati, Ohio, and I just fell in love with the idea that you could literally change the world with a small team running after, kind of a shared mission. So that's kind of the backstory. Like I said, I've sort of been in startups ever since, kind of serial co-founder of tech companies, never been an engineer myself, never writing code, but always working around technology. Started a number of companies and kind of got to the point where I had a service company, so we would help other organizations figure out how can we leverage technology to build a better company, to solve problems, to do more, in our own space. So kind of this innovation type work we were doing. I just realized at some point, like, looked around, we had 30 employees, all, most of them developers, and they loved their jobs. Like, I was just struck by how cool it was that we had created 30 jobs that people loved. Like, they were better human beings because they had a good job. And it just, something about that was like, man, what if you could do that with 1,000 jobs? Like, what if you could create a company in a space that, if you win, could create thousands of jobs and could be, could last for a really long time? And that's what got me really looking around at organizations and industries. And that's kind of what piqued my interest in insurance, honestly, was I looked at, the Cincinnati region. I'm like, man, the people who've donated the most to our communities, the people who've been around for 100 years, who've created thousands of jobs, these are insurance companies. I'm like, that's the kind of legacy organization I want to be a part of starting. So that's kind of what got my entrepreneurial red flags going. I'm like, man, I think there's an opportunity to leverage data and technology to build a company in this space if I could pair with a domain expert.
Okay, and so a couple of things to take out of there. First of all, Cincinnati University, I got to tell you, I mean, for a small school, they are explosive, especially right now in football,
That's right.
right? Oh, man, I tell you what. And then basketball, you guys have always been someone that out of nowhere will just come out for 2 or 3 good years and just put the pounding on. And then you guys kind of fade back away for a little bit. So, yeah, dude, love it, love it, love it. A lot of great things, especially in Ohio for insurance. Yes. I mean, it is huge. You got Iowa, you got Illinois, you've got Ohio, real big for that. So you're kind of in that breeding ground, which is really exciting. And Tim, so you found you said a founder, or I mean not a founder, a partner to help you with this. That's what you needed. Right. And so one of the things I like, Tim, about you is, as I read your bio over here, is that you're the chief strategy officer. Do you have a CEO that works for your business?
Absolutely. So David McFarland's that insurance background expert who's an actuary, been in insurance his entire career.
See, loyal listeners, this is a lesson to learn, number one. He knew his strengths, knew he's been a strategy guy, board member, marketing officer his whole life, stayed to it. I think sometimes, Tim, and this probably helps you, I imagine, as in your series rounds, because they realize instantly, like, wow, this isn't a guy with an ego that wants to be the CEO. He wants a really good business. Have I been the first one to tell you that, or have you ever heard that?
No, I mean, that's been, I really do attribute that to our success. Is like we had 3 co-founders, and I've known for a long time what I'm good at, and I'm good at strategy and growth and building culture and teams. I'm not great at operations, and I'm not an insurance expert. So the other 2 co-founders, one is an expert at operations. He's our COO, and he's been in operations his entire career. The other is our technical founder, David McFarland, who's been in insurance his entire career and understands that world as well as anyone. So I think that's been the attractive part since whether it's team members we've recruited, investors we've pitched, or partners, like having that combination of technology and startup expertise, operational prowess, and insurance knowledge, like really is the magic. Like you see a lot of
That's
people who
good.
believe we can take out an insurance company with just a bunch of developers, right? And then they don't understand the
Hmm.
industry and they make a bunch of mistakes and it ends up killing them. Or you see a bunch of, folks who've been lifers in insurance who say like we can do it a little bit better. And absolutely you can do it a little bit better. If you've been in insurance your entire career, it's really hard to question assumptions that I might question not coming from insurance, right? So I think it's that unique blend of both that has made Coterie successful so far.
So let's talk real quick about that. Coterie, what is it? Where? So you got together, you said, I got these three partners. What's the product? What was the vision? What's the
Yeah,
idea?
we believed we could.
Hold on, before we go there, real quick. Who pitched who on the
That's a
starting of
great
Coterie?
question,
That's a
Jeff.
good
This
question.
has been kind of the brainchild of David for decades. So, as he has gone on his journey, starting at NCCI years and years ago out of college as an actuary, he has just slowly
Wow.
seen like opportunity after opportunity for doing things different and better. So throughout his journey, he started to see some opportunities like, man, no one is leveraging data from systems that already have data. Like that's a big red flag. Why aren't we doing that? Why is there such a manual process, right? Eventually, he made his way to Jewelers Mutual, and they realized like, hey, if you actually put insurance in places of relevance, like an online shopping cart where someone's buying jewelry, the uptake rate is higher, and there's less fraud, right? Because people are actually buying jewelry. So he's like pulling on these different threads and experiences over time,
Hmm.
and then sort of seeing all the work that's going into the personal line space, but very little innovation being, time and energy being focused on the commercial space, in addition to, less regulatory scrutiny, meaning like it's easier to file a bunch of insurance products in a bunch of states quicker on the commercial lines and saying like, man, I think there's an opportunity to build a great commercial insurance company. So it's been a little bit of a through line throughout his career. David moved to Cincinnati. He was kind of winding down his time at ClearCover, which was a company he helped start in Chicago, and really wanted to take a swing at commercial. So we got connected over coffee because Cincinnati's a not a huge town, but big enough. It's a great place to build a company. Small enough that if you're a new entrepreneur in town, like you'll probably get pointed in my direction or a handful of other entrepreneurs' direction. And that's how David and I met. Was he had this pitch, he wanted to
Nice.
run after this company, and he didn't know I was kind of looking for my next opportunity quietly, and I was like, yep, this is the exact kind of swing, the exact kind of founder I want to partner with.
I love that, dude. We're going to swing back to that. I want to know about the connection. Okay, we have the idea. Now, how we're going to get the money and go forward. Before we do, though, tell us about Coterie.
Yeah.
Well, so we got a little download. How'd this come about? I mean, what is
Yeah,
it?
absolutely. So, we're trying to build the next great commercial insurance company is kind of the top line, right? Our mission is to build and foster a world-class team to bring speed, simplicity, and service to commercial insurance. The way we're doing that first is by attacking small commercial. We all have a heart for small businesses. As a small business owner myself, I know how underserved that category is. And, we just believe that, the fact that 40% of small businesses don't have insurance is a big problem. Like this is where most of our jobs in America come from, right? And it's
Hmm.
a small business is one mistake. You guys know this. One bad decision, one bad mistake, one catastrophe away from lights out, and all those jobs are gone. Like we believe insurance is obviously a critical part of that, and we think like not many people have focused, especially on that really small end of small commercial. So we've said, what if we could leverage data and technology to build a better experience, to make small business insurance readily available, whether you want it from an agent or you want it from a system you're already using. Like we just want to make it really simple for you. Now, the reality is, like most small business owners, they're really smart. They lean on experts. That's why 90% of small business insurance goes through an agent still, is because they don't want to be an expert in small business insurance, right? So they want to lean on
Right.
an agent. You guys probably know this better than anyone. Like agents are spending way too much time trying to write a $500 small business policy that they make jack on, and
Yeah.
it's
Amen to
yeah,
that,
so it's
Tim.
it's like it's a time consuming thing, but they also want to help their customer, right? Like they want to help that small business owner. They want to be able to provide a solution, not send them down the street to someone else. So we just said, what if you could write that policy in 3 minutes and get it done all online and not have to go back and forth with an underwriter? Like, why can't we automate that process? So that's exactly what we've done. We built with data and technology first to say, we're going to automate the underwriting process. We're going to we're going to bring it all online, all of our appetite, right? You're going to get a yes or no in a minute, and you're going to be able to bind a policy in under 5 minutes, and policy docs are going to be in your inbox. And we're going to make that magical experience for you. we're also going to help you become a better agent, because we know it's really hard to understand, 2,500 different class codes of small businesses, right? But again, we can leverage data and technology to say, hey, for a class code like this in a location like this, here's the coverages and the limits you should probably consider, sort of like a businesses like you type approach. So not only are we making it easier for you to write that policy, we're helping you be better informed as an agent and provide better solutions to your customers. So that's kind of the lowdown of Coterie.
I really, really like that. So you're using, your distribution model, is it direct? Is it to direct, or do we use any independent agents?
Yep. Most of our business is coming through independent agents, right? So we've built a tool that, a dashboard tool that an agent can come to Coterie and use our tool in a couple minutes, write a policy. We've done API integrations with most of the InsurTechs in the world. So if you're using a different system or a tool or, whatever it is as an agent, like chances are Coterie has already integrated there. So you can leverage the stack you're already using.
So Tarmica, if I'm using
That's right.
Tarmica over there with rags in them. Yeah. So, okay, that's
Yep.
perfect. So let me ask you this, just getting a little bit more detail. Sometimes I think agents get confused here, and especially I think the InsurTech vendors do as well. Are you an insurance company? Is it your paper? Or are you just providing tools to make it more simple?
That's a great question. The way I describe it is we're an MGA acting like a full stack carrier. So it's not our paper. We have fronting companies we work with. We're writing on their paper.
Okay.
But we have the pen. So we have full control. We've built and filed the insurance products. We manage the filings. We manage, claims.
Good to know, Tim. That's a great separator right there between you and a lot of other people. They're just creating the technology, which is great because as agents need that. But they're not truly commercial insurance companies. That's very rarely do I hear what you said. You're filing the rates. You have the PIN. Yeah, I like what you said too. An MGA, but has the PIN on that stuff. That's great. That's great. And then
it was an important distinction, because you can't build a magical digital experience if you are beholden to being integrated with legacy carrier systems. Like, we just can't wait a minute for a call out to another system, right?
Preach.
So that's why we decided we have to. It was harder, obviously, right? It took us years to get to market because we were going to build and file these products, but we just knew we couldn't create the experience we wanted to by leveraging third-party systems that existed.
When did you start? When was that meeting between you and Dave?
Summer of 2018 is when we first started talking. Fall of 2018 is when we incorporated.
And you said, okay, we're going to do this now. Do you have any money? No. Do you have money? No, I don't know. Let's go get another guy. He doesn't have money. Who's got money? How'd that go about?
Tim? So I'd say there was a kind of early angel round first where, one of the benefits of being a serial entrepreneur is, three of us co-founders, we had all been part of starting things before, so it wasn't our first rodeo, which means, we have an existing network of folks who sort of already believe us and understand us. So, it still requires pitching a ton of angel investors before someone writes a check and says, yeah, I'll give you money before you have a there. We'll take a gamble on you. I'll tell you, the difference between doing that early on at Coterie versus doing that early on in my first company was pretty significantly different. First time founder, not knowing what you're doing, not having the network, like it was it's always an uphill battle. The hill's a little less steep though with each company you're a part of building. So, we kind of tapped our network, got some early backers to say, hey, unlike many other companies, like it's actually going to take us a while to get to market. Like, we got to do this thing right. We can't just build an MVP and launch it overnight and start getting revenue. Like, this is an industry that's heavily regulated that is going to require a mountain of effort just to get to market if you're going to do it differently. We don't want to just build some technology. We want to build a great experience and great insurance products that actually meet the needs of a small business. So raised enough capital to get to a point where we had, basically built the relationships we needed on the insurance side to say, okay, we've got reinsurance, we've got a fronting partner, right? We've got permission now to go build this thing. And that was enough momentum to go raise a little bit more capital that allowed us to basically build kind of the first version, file products, get our first partner live, which then was kind of momentum to raise that next round of capital. And, building a startup, the goal is not to raise capital. And frankly, I'll tell you guys, early on in the journey at Coterie, the three co-founders said, like, if we could do this thing without raising much capital, that would be a much better path, because as soon as you get on that train, you don't get off of it. But pretty quickly, we realized we were onto something special, and we just knew, like, if we don't do this, someone else is going to. Someone else is going to go raise a ton of money, and we're going to kick ourselves in the butt for not being more aggressive. And so we decided, you know what, we think there's a moment in time where, no one else in the world is doing this. We have a right to win. Let's be aggressive here. Let's go raise capital. Let's bring partners alongside of us who understand this space, who are excited about this vision, and can give us money to go faster than we would otherwise be able to go. So, that's kind of it was a shift in mentality, and I think it was absolutely the right call. And, that has enabled us to now raise, about $65 million in total over the last 3 years, 50 of that coming in our Series B just very recently here. And that, what that does is we've got a world-class team, like on the technology side and the insurance side, like we're hitting above our weight class in terms of being able to attract and retain talent. And, capital certainly enables that.
And you guys are writing policies right now. Agents are selling your
That's right.
policies. Yep. And there's certain classes, 300, 400, 500 classes probably right now. And you guys thinking about expanding?
Yep, absolutely. So we've got a business owner's policy, general liability, and professional liability. Those products are all live in 48 states. We've got approval in 49, and New York hopefully coming soon as well. So maybe even by the time this posts, we'll have those 50.
Yeah.
New York's never coming. Nobody care about New York. Hey, Ryan Hanley, nobody care about New York. DFS don't
New York or California trying to do business in those are crazy, but you obviously got into Cali.
Yep. So we're getting a lot of business in California, Texas, and Florida as well. We're live in Florida. So, and actually pretty broad appetite. I don't know the number of classes offhand, but we've got a really large, broad appetite because in addition to agents and brokers, we have partnered with the likes of Intuit and built an insurance product for them as well, or alongside them as well. So we're kind of powering their insurance agency also. Which to do that, you have to have a broad appetite, right? You can't go into partners like that and say like we're only going to write a few classes, right? We need a really broad appetite.
Right.
Tim, just a couple questions going back a little bit. There's a lot of listeners. I would say maybe 80% plus of the listeners here are insurance agency owners, right? So talk about InsurTech in your world and just talk about the mechanics of Series A, B, C, D, and even C round. Like, what do they mean? Because we have a lot of people listening to this for the first time and trying to understand it. And also a couple of hard questions is, which round do you think was harder, the Series A or the C round? And
Jesus, he's gonna have like some note taker here, Jeff.
Who are your partners that you think on the venture side that is critical, that you are like, man, they're the right
all
partner?
Good questions. I will say we have been very fortunate to have just incredible investors all along the way. So for kind of the traditional venture story or venture journey looks like, usually either kind of founders put money in or friends and family, or you get some early angels. So that you can call it a friends and family or an angel round, but you're usually raising a couple $100,000, maybe to $1 million, just to give you a chance to see if there is a there, right? So that's kind of typically that first journey. If you're able to kind of prove that out, prove some of your theories out, like usually you would go on to a seed round, right? And depending on where you're at, that could be, again, a couple $100,000, could be $1 million, could be 10 million, depending on, whether you're in the Valley or in Ohio, right? I would say most typically you're going to look at a couple $1 million seed round. I think those first rounds for me are always the most challenging. Usually like those first couple of rounds, what you're selling is a story, right? You haven't really built anything, or you've built very little. If you've built anything, you don't have any real momentum. There's no proof yet that the world wants and needs this thing. So like there's a shift, at some point in a company's journey from, are we just drinking our own Kool-Aid, or is this actually a need? Is there a hole in the market that we're plugging here, right? Like, and then at some point the shift goes to execution risk. Like, okay, there's clearly an opportunity here. Someone's going to win. Can it be us, right? Can we actually go do this? Mm-hmm. So that's where, typically Series A, Series B, you're closer to that point of like, all right, we've proven there's a market opportunity here. Can we get the right partners and the right capital and the right employees alongside us to go do this? So, that Series A was definitely a challenge. That might have been our hardest round to get done, most stressful. I mean, that's like, just to peel back the curtain, like you hear the stories of like founders making loans to make payroll and like, weeks of money. Like that was our story. Like we had maybe a couple $100 in the bank when we finally closed our Series A, and that was after founders putting up some of their own money. So that it was a stressful time. We never doubted we could get it done. And here's the crazy part: it was like 2 weeks before COVID shut down the world. Like we got it signed, we got it done, and then literally like lockdown happened right after that, and it was like, holy cow! Like if that timing was different, it's game over. Like, so to your question of luck, or like, man, we can't control that, right? Like we have no control over that whatsoever, and it doesn't matter how good our story was. For a period of time with COVID, no one was writing checks, right? Like it was just, we're gonna all pump the brakes and hold on here and see what the heck is going on. So that was incredibly
Tim,
fortunate.
you're so right. 2 weeks difference, and you would have just been wiped out. We wouldn't be sitting on this podcast.
Right. Yeah.
Wow. Holy cow.
So that was
that
was a stressful time. Obviously we got through it, and we're fortunate enough to have raised at the right time to have money to kind of pump the brakes ourselves and go like, let's hold on a second, see what's going to happen here. Like, let's see what happens with small businesses. And, obviously it's a stressful time for restaurants and retail and small businesses who are getting shuttered left and right, thanks to not being able to have customers. But for us, we also saw that as like, that's opportunity, because what's going to come on the other side of that. Like the largest creation of new small businesses that we've seen in a long time, like that's inevitable. And the thing we didn't anticipate is the surge of people who decided they were going to quit their day jobs or got let go and had to hang up a shingle on their own as a consultant. So not only was it kind of traditional brick and mortar retail, like there's this wave of kind of new consultants and knowledge workers who are saying, I can probably build a consulting practice on my own. Like, guess what? Those folks need coverage as well, and they're going to be home based. And fortunately, we can help them.
Jeff, what was question number 11 that you asked him? What was the last one about the vendor, or who's been a strategically good vendor?
So a couple I'll just rattle off have been tremendous. RPM Ventures, they led our Series A round, and they definitely have some insurance background and knowledge. So they had been investing in InsurTechs like Hippo, and so getting to work with partners who'd seen this story before in a non-competitive way, right? Hippo's personal lines focused, but they had been on a journey. They were a couple steps ahead of us, and we've gotten to learn from some of their mistakes and some of their wins as well. So that's been tremendous, and they've never wavered in their support of us and kind of opened doors for us. And I would say, having some insurance company logos behind us, even though they don't sit on our board, they didn't lead rounds, but early on we had some Western and Southern was an investor, the Hartford was an investor, and continue to invest along with us. Like those are some nice logos who go like, okay, they've vetted us, I promise you. Like there's some heavy vetting before those guys write a check. So that leads to some credibility when we're talking to new partners as well. And then Intact Ventures has been a huge part ever since then. So Intact's out of Canada, one of the largest insurance companies in the world. They've been a huge part of our story more recently. So we've had incredible investors who understand the space and will be patient with us, meaning like, there's a temptation in this world to build for a quick exit when you get on the venture train. We've said from the beginning, we want to build a great company that can last for a long time. And we've got patient investors who have bought into our vision. And that's really exciting.
Wow. Yeah, that's good stuff. That's good stuff. Jeff, was that all your questions? Just want to make sure I'm being serious.
Man, there's a couple of deeper ones I want to go into. I'm watching Tim's reaction.
So one of the cool things that's new. First of all, let me ask you a question real quick. Do you know Duck Creek? The guys at Duck Creek?
I know of the company. I don't know the guys there. Yeah.
The company. Okay, I was just curious. You mentioned Intuit, and I know they did a lot of stuff with Intuit, but that was 7, 8, 9 years ago. Now, let's talk real quick and swing over about this, because, Tim, I would like to know, like, some other InsurTech that, like, you're out there, you've got some pulse, maybe you don't, maybe you're so buried in your company, but the feeling out there, what are some really good other InsurTech carrier or companies out there, vendors, doesn't have to be a company, and then also on that, I want to talk about Agent Sync. because they're all over the place right now. They're a unicorn, and I can't figure out why. I've read the damn thing over and over, the press release. And one of the things that all agents, loyal listeners, holler, because you hear me on this, is these InsurTech carriers that call us and are like, well, what we're going to do is we're going to work on getting all the systems connected. That's what we're going to do. And I'm like, bro, you got to be new to the space to be thinking that you're going to be able to do that. Everybody's tried to do that, you know? And when I read through this agent sync, that's kind of what I'm reading here. And I'm thinking, what are they seeing in these people? And I don't really know. And so I'd love to get Jeff and Tim your thoughts on this. I'll go with you, Jeff. What are your thoughts?
Let's start with Jeff here, and I'll chime in. But
Well, I think like people overthink the InsurTech thing. Really, like, you know, I was chatting with a good friend from Munich Re who played in the InsurTech space pretty good, and she was like, you know, the early entry of InsurTech investment people looking for technology, looking for stack technology, full stack technology, looking for things like that. But if you look at a lot of the big legacy companies, they got technology. You look at them, they got money for sure. They have data. So a lot of things you see in a pitch deck, technology, data, and integrations are, everybody have those in their pitch deck. But what makes somebody a unicorn is people who can reimagine tomorrow. I think that's one of the critical things about InsurTech or FinTech or whatever. You got to understand what's broken, right? So David McFarland, I have never talked to him, by the way. He came from a background where he saw what was broken, and that is so important. I can tell you how important that is. Just imagine, you know, Uber trying to pitch investors. That's why, like, what Mark Cuban turned him down is Mark Cuban probably didn't think there was anything broken, but Uber saw what was broken. They realized how much online rideshare that was out there, right? Airbnb saw what was broken, and David McFarland definitely saw something that was broken. You know, I'm not actuary. I don't come from that world. You know, I'm not come from the carrier world, but to see what's broken and all the area that's broken, and if you think, hey, if I just put this chess piece this way, put this one in the front, and on a process flow, this goes this way, on a workflow, this goes that way, on a people flow, this goes that way, and the velocity of money, remember? A lot of people don't talk about velocity of money. Every carrier have a different velocity of money, and do not get that wrong.
What do you mean by that? What do you mean by that, Jeff? Us loyal listeners don't live in your world.
So look at like the carriers who are like, I don't know, I feel like I might have a backlash.
Carrier X.
I'm not going to name the names, but there's carriers. There are carriers who went out the door says we're going to replace the insurance agents, right? We're going to replace insurance agents, and they're not part of our business plan. We're going to attract sexiness of direct-to-consumer. Google is a master sandbox. We're all little slaves in it, right? So us little slaves paying our little dues, you know, we had to pay Google. So how I give $100 to a direct-to-consumer InsurTech versus how I give $100 to a agency InsurTech will spend completely differently, because the people who are spending the Google money, they have to pay Google first, drive the online traffic, and then to generate that piece of business, they have to build internal process, internal people, which all cost a lot of money upfront, and then they get that piece of business later. Much later, after they spend a lot of money, and you probably have spent 5x, 10x more money to generate that piece of traffic, versus an InsurTech carrier that rely on agents. I give him someone like Tim $100, and they just build a piece of air called actuary, right? The oldest thing in the book called actuary, and they say, hey, come get this actuary, come get this drug, and we write premiums. You know, we put the computer expense, the recruiting on people expense, we put the driving of the online traffic expense on our own pocket. So then we go out there, write piece of premium for Tim, for Coterie, and then we get paid 30, 45 days later because commission cycles is a month out. And Tim did so much more with that $100, the velocity of money returned much faster, and all the expenses pushed on someone else's pocket, versus the InsurTech of the last 5 years. they put all that expenses on their own pocket, right? And they probably spend 10x more money than Tim. So this is why I think like the company like Branch, the reinvention of clear cover, Hippo, and Coterie is ahead. They're doing it right. So now they're not just taking market share from the super regional carriers and the legacy carrier because they're taking insurance agents' time and they're taking insurance agents' quotes. They're also reinventing the velocity of that money.
I want to hit back at that, Jeff. That was really intelligent. I got to tell you, I've really never heard you put the velocity that way. I knew what you seriously. Yeah,
I listen to a lot of podcasts.
That's a good point. And I've probably said it at some point in time. I just forgot. Too much cannabis. Hey, now, Tim, let me ask you, I mean, any of your thoughts on what he said or other InsurTech vendors out there that you know?
Just to react to what Jeff said, the way I've talked about it is, it's the difference between selling a vitamin and a painkiller. Like, it's so much harder. If you want to try and go direct, here's the thing we know about small business insurance. Small businesses don't want it. They're not excited to go buy insurance, right? We know that. Like, to try and hit me as a small business owner, if you try and hit me over the head with an ad for a small business policy, like, and it's just not time for me, like, it's really hard. It's just really hard to get me to care about it, right? So when I care about it, though, who do I go talk to? My agent, right? So if you go talk to an agent and they already have people banging on their door saying, help me with a small business policy, you're selling a painkiller. Like, you have a solution that solves a problem that addresses a need right now. If you are trying to, even, working with the next great, like, Intuit's an awesome partner, but for us to work with Intuit and try to, like, sort of collectively convince people to think about insurance as part of that ecosystem, it's just different. It's a vitamin. It's a nice to have. Cool, I can also get my insurance here. I'm probably not sitting on Intuit at the moment in time, though, when I think that I need insurance. So while I think it's an interesting opportunity for us, it's still a vitamin versus a painkiller, where I know that when that person needs insurance, they're probably going to start with their agent. And so we just want to make it really easy for the agent to be able to sell it. So, and Jeff, I just comment on something else Jeff said early on, was like the difference between someone who's sort of sees an opportunity for like incremental improvement in industry versus like radical disruptive improvement. Early on, we had a chance to take capital from investors who would have given us money had we decided basically just to integrate with a bunch of carriers and, build a rating platform. They loved our vision, except they thought it was silly for us to try and build our own products and get to market that way. They were like, no, just integrate with people who already have insurance products and build a better mousetrap. And we just said, like, I think someone can do that and make a nice business on it. It's not going to change the industry. It's not going to be the kind of lasting disruptive change that we believe this industry is, ready for, or will be ready for eventually. So we're going to fight the harder fight. We're going to do hard things first. We believe by doing that, we'll give ourselves a better shot at winning kind of long term. So I think that's your point of, there are few who understand kind of deeply what an industry really needs and what the opportunities are. And that's kind of the difference.
This is a really great conversation because we got Jeff who brought this velocity up, gave us a great analogy. You've really done the same thing from your positioning. Now, as an independent insurance agent who's actually selling the product, Tim, that you have, and actually living with some of those expenses on the agency side, Jeff, you hit on something that is really remarkable. It is a huge, huge sticking point, has been for 20, 30, 40 years in this industry, about who carries the weight of the cost. And so one of the things that I think makes great is when what we're seeing right now in InsurTech 1.0 is we're seeing that very, very, well, it's actually 2.0 because they used to be in bed with the carriers. And Tim, I'm talking about everybody before you guys were even around. Now you guys have come out and said, wait a minute. At the beginning, 3 years ago, we didn't need the independent agents. We had this figured out. Now they realize that they need us. And so now they're using it. And that's what we always knew, because if you thought about it, our weakness was the technology portion, giving it that customer experience. You now in your company can come in and help us make that, and getting a quote in 3 minutes, being able to have QBI, quote bind an issue. Those type of things our carriers don't support. So that's where you come in. But I think where we get back to the velocity of money, not really, but kind of, is where we spread those costs to say, I think InsurTech 3.0 is now how can we help you on the back end, right? One of the things that I think that just totally ruffled the feathers of the industry, which I think they were right on, is Hippo. Because I could market to a person, send them through my API, which was nothing more than their system, and then they would they could quote bind an issue, or someone would reach out to them. And here was the key. I thought that was great. They would even service that client. Now, I know, loyal listeners, you're going, wait a minute, Jason's giving up the most important part. No, it goes to the very same thing where we all thought that they didn't want e-signatures. We all thought that they didn't want technology to be able to buy a product from us. Now we've all been proven wrong, loyal listeners, agency owners out there. And I believe the next step is taking that cost off of us. And there's going to be some genius model that's behind the scenes that allows us to, yes, still be connected, but be using your technology to be able to service that, which makes you more efficient as well. I think that's the second half of this. Thoughts on that, Tim?
Our vision for that is like, there are certain things that the customer can do themselves. Like, let's enable them. Like, you need a cert. You would actually prefer, as a business, I know this, I would prefer if I've got a contract waiting for me that I need a cert for, like, I want to just be able to log in and go get that dang cert, not wait on an email chain or a call with my, like, we're going to enable that. Like, we want to push that stuff down and say, like, there are certain things that make sense for the customer to be able to do on their own. Like, great, let's build a great policyholder facing portal that will enable them to update their address, right? To look at their policy details, to get a new cert created. Like, there are things like that you don't need to be spending time on as an agent, that the customer would actually prefer to do on their own anyway. So we think part of it is like enabling that, some of the technology we've got on the back end for our team, and pushing that forward to say, let an agent do it if they want to, let the customer do it if they want to, but let's simplify the whole dang part of it. Like, other than you've got really deep insurance questions about your policy, great, you should call your agent. Let's talk to them about that.
Correct. Right? That's right, Tim. That makes us professionals. We're there to help when they need it. That's exactly right. Wrapping this up, Jeff, we've went a long time. Anything you have to say to Tim? Anything we didn't hit on? Thank you very much for your velocity of money. I'm going to cut that out and pump the shit out of that. Go ahead, Jeff.
So I have to drop some disclaimers. So, Quantum Assurance, we are an agency that writes a lot of Coterie. And I think I recommended Tim, right? Jason, when we were chatting the other day, I recommended bring Tim on because I really believe what you guys are doing over there. So, there's just a lot of things that you guys are doing right, and I applaud you guys. And then Jason said something like InsurTech 3.0. I'm not sure if we're at 3.0 yet, but you guys are definitely the version of InsurTech 2.0. InsurTech 1.0 was like the guys of
Lemonade,
Roots, Metro Miles. Lemonade. And then they came out here and said, we know how to build a mousetrap, but at the end of the day, their mousetrap is only digital, and their market share of what is worth right now is market speaking out against how they feel like their cost per acquisition is, right? People say, oh, their loss ratio is horrible, their combined rate is horrible. You know what? Combined rate is combined with CPAs. And if you only have one trap and you've been stuck in that way forever, it's a horrible foundation to be building on. And versus you start with the agency and build the best possible foundation of cash flow, velocity of money, and CPA. And then you can start venturing out, start building embedded insurance with other companies, right? Embedded insurance is a huge part of InsurTech Reimagine Tomorrow. We see so many industry are now merging together. And then you start stacking things like direct to consumer, like a little call center, baby call center, or multiple call center, with remote call centers. And then you start stacking digital on top of it. I think this is the way to go in InsurTech 2.0. I just want to make sure that everybody don't just get this podcast out of this session. If you are on LinkedIn, make sure you go follow Tim Metzner on LinkedIn, because the last couple weeks you just been on a roll. I think you dropped this one article of the eyes of the founders, right? Talk about your journey, not your journey the last 2 years about what it was like to be a founder and being around founders in your crew, and some of the amazing hires you had. I love the part you shout out to like Catherine and Ray, and then these amazing hires that you guys were blessed with. And if you are on LinkedIn, make sure you follow Tim Metzner and make sure you follow Coterie
No,
and
I
his
appreciate
crew.
that.
So, anything you want to add to that, Tim?
You'll learn quickly about me. One of the things I care about more than anything is building great companies and great culture. I think we have an awesome opportunity to enable agents to do their job better. And a lot of what I love actually, Jeff, you mentioned like kind of the couple steps down the road, like the next plays we'll run. Those are not separate from agents. Like those plays actually will benefit agents as well. Like we want an agent to have a super easy button for a customer to quote and bind right on their website as well, right? Like we want them to make it easier to service a policy, like for their customers, for the policyholders. So a lot of the stuff we're going to build that makes it easy for a business owner to get stuff anywhere. I think agents will tremendously benefit from that as well, and that excites me because they're small business owners themselves, and that's sort of our heart at Coterie is like we love serving that small business owner.
That's awesome, man. That's super, super awesome. Tim, greatly appreciate your time. Thank you for joining us on InsurTech Week. Just like Shark Week. And Jeff, I really do appreciate you. Great conversation. Really, I honestly knew it would be good, but I really think this is one of those that I don't always push my own podcast. I don't post and say, hey, go listen to this podcast. I try to save it for the ones like this. So when I do push them, people are like, hey, Cass must really want me to listen to this. I don't know if they really think that, guys. It's just in my head. Big ego. Barely got through the door, but don't worry about it. Jeff Shi, appreciate you. Tim Metzner, this will not be the last time we talk. Hopefully one of these days we'll sit together and have a cold, refreshing beverage. That would be a good one, and it'll be on Jeff.
We should go live on Cincinnati. Imagine us going live from
That's right. That'd be a good idea,
shop.
Jeff. That'd be live from Cincinnati, WKRP. Remember that? That? That's a long time ago. Yeah, so that's probably like a known thing in Cincinnati, but to me in St. Louis, that's like unbelievable that I just remembered that. Hey, Jeff Shi, Tim, thank you very much for your time. And loyal listeners, thank you, because you are who we are, and I do what I do for you. Remember, tell me your thoughts and tell me your ideas, and I'm going to tell the world what you have to say. This has been Jason Cass. I'm out. He, she, that's Metzner. See ya!